Market structure shifts and break in market structures are basically your entry criteria. If you don't see a break in market structure, you're not going to be entering a trade. That's like your confirmation bias that, what you were analyzing was right. But like me and like you, I'm very sure there have been instances where we've had a break in market structure and it still goes and reverses against you. Now, in some ways, it's fine because it's just the probabilities playing out as you would have heard many, many times. But in some cases, which I've figured out from a lot of backtesting, is that sometimes it's a break in market structure and it's actually very low probability. And that is what I'm going to show you in this video, how to spot that so that you can avoid these losses and increase your win rate, number one, and increase your overall P&L, reduce stupid losses, very low probability. So first, I just want to show you an example of a break in market structure. So a typical generic example would be something like this. Okay, we have a high right there. We break it right there, and then we look for some sort of area of interest. This could be a fair value gap, order block, those sorts of things, but I'm not going to talk about that in this video. So let's say this is a fair value gap, okay? FVG, something like this. So this is a break in market structure, body close obviously. If you haven't been using a body close and a wick break, just change that immediately. You use a body close. It's good, like very, very high chance of working out. And then we expect it to come down and then go up, right? That's a normal break in market structure. But one thing you should keep in mind is that if we are coming down very, very impulsive, something like this, and then we see a break in market structure like that, something like this, and then a fair value gap, and then you're entering a trade like that, this is automatically very low probability, and I'll tell you why. Most likely there will be fair value gaps displacement on the way down. Now, if there's displacement on the way down, all it is a pullback to one of these fair value gaps before we tap into this and then carry on going down with the move. So if you enter this trade, you're essentially just playing the pullback, and the pullback doesn't last very long. Maybe if you're lucky, it'll go all the way up to like the, 78% retracement level, but you're kind of guessing then and hoping, and we don't want to do that. We don't want to hope. We want to like be, we want to have conviction basically that, what we're doing is right. High probability trade, high probability conditions, and only then are we going to enter a trade. So we want those conditions. So automatically, those are two examples that you should look at. This would be a high probability break in market structure right there, compared to something like this. This would be a low probability break in market structure. And I'll show you many examples. I just want to say, first of all, make sure to like the video so this advice can get to many people, because I know loads of people just like you have dealt with the losses like this. Second, I've made a free template down below which I can share right now, I believe. Here, hopefully my screen sharing this, but this is a market structure shifts template I've made for you. It's completely free. It'll be the first or second link in the description, but all it is my personal examples, and you can see the fake ones right here and the real ones. Now the real ones I'll get to why they are high probability, but just look at the fake ones in your own time and study them and try to compare them with your trades, and I'm sure you'll see massive improvement. But yeah, looking at the real ones, sometimes what we'll have, let's say a bearish scenario this time, we'll have a large move up like this, and then we'll have a break in market structure. Now this, from what I was saying before, automatically seems very low probability, right? And you're right, on face value it does seem very low probability, but nice voice crack. But what I'm saying is, in a situation like this, what I've realized is that let the break in market structure happen. Okay, let that break happen right there. Let it happen. We're not going to put our trades on just yet. We're going to wait to see if price really has the momentum and conviction to go and push through. So we have a break in market structure. Let's say there's a fair value gap there, okay? We want to see all of these getting disrespected like that. Only then will we see that, this break in market structure is actually powerful. It actually has momentum behind it. And now, in a more high probability scenario and conditions, you can add your trade, add your sell limit in this instance. So sell limit would go somewhere there, and then price can come up and go down. Like that's much more high probability than something like this. Just breaking market structure right there after a massive impulse leg, comes down like that, leaves a large wick, and then just goes and reverses, which is what usually happens. So now enough of this theory stuff. I want to actually show you the examples I've already shown you on the template, so check that out. But I want to show you an example right now, which was actually done today. So this is fresh. By the way, this is PPI. I literally predicted this. I mean, it's typical. There's a consolidation right here. Liquidity goes down, takes out liquidity, goes up to the buy side. It's just classic. But this was the break in market structure. Exactly. It was right on the 4 minute, I believe. Right Where are we? Right here. Perfect. So we came down, swept the Asian low, swept out this liquidity as well, right there. And then, as you can see, a swing high. If you don't know what swing high is, check out the market structure 0 to funded series. But breaking market structure right there, fair value gap right there. Now, what can you see? I'm actually going to bar replay this so it's easier to see. But what does this show you? It's like extremely strong impulsive leg down. Extremely strong. You can see it. Plus, what do we have here? I believe there's a tiny fair value gap there and another fair value gap there. So automatically entering off this trade, my entry FVG, automatically entering off this trade like this is low probability. This is like a typical impulse correction. I actually talked about this on the Discord. I posted this saying that, it's a classic and I wouldn't be surprised if it gets taken out. It's typically just like this. And we're playing this part, which we don't want to play, okay? We want to play these moves. So we're playing this in this scenario. Now, if it changed and we ended up, pushing up and, I don't know, getting up to here maybe, then I'll be like, you know what, this is actually showing me momentum. So now, let me put my trade, my buy limit, and then, it can come down, take me out, whatever, I'm happy. There's more conviction compared to something very minor and weak like this. So save yourself from those losses, and as you can see, obviously, we got taken out. So save yourself from those losses is what I would say. Hopefully this was a useful video for you guys. Make sure to check out that free template as well. That's going to help you a lot. And pretty much, yeah, happy trading. Stay safe.